Hello and Happy New Year. I hope everybody's New Year's off to a good start and wishing you all a happy and a healthy New Year. This is the 2021 fourth quarter review. For today, I thought I'd go through a review of what's expected for 2022 and then talk a little bit just about the quarterly reviews. So first, 2022 is kind of being pegged as the great moderation after the growth we saw in 2021 and the inflation and all the changes. We're looking at more moderate expectations for 2022 with growth and inflation and investment returns. In terms of the outlook for the economy, right now, economists are expecting about a 4% growth rate in 2022. And on the positive side, kind of driving the market higher, is consumers are in a very strong position. I'll talk more about that in a minute. Retailers and manufacturers are going to have to rebuild their inventories. Most have historically low inventory levels. And corporate earnings are expected to remain above 10%. In terms of the consumer is in a position of strength heading into 2022 with robust household income and accumulated pandemic savings. The other thing that's happening is jobs are continuing to grow and wages rising. In terms of employment, December of 2021, we saw a big drop in unemployment down to 3.9%. Right now what's happening is the labor force remains smaller due to an increasing number of workers taking early retirement and people delaying their re-entry into the workforce due to problems with childcare or fear of infections. So right now our labor force participation is at about 61.9% versus pre-pandemic at 63.3%. And I'm sure you've probably seen headlines or articles of where did all the lost workers go. So we're going to continue this year to probably still see the tight labor market that's going to result in higher wages, hence higher inflation. Which brings us to the next point, inflation and interest rates, which are very linked. In December of 2021, inflation hit 7%. That's the highest it's been since 1981. Right now, the Federal Reserve and Treasury is looking to bring inflation down to about 2% by the end of the year. And the way they're going to do that is raising interest rates. So right now, the expectation is to see about 4 interest rate rises in 2022. And looking at the 10-year bond going up, it was at about 1.8, 1.9 early last fall, going up to about 2.1% by the end of the year. In terms of year-to-date performance, the U.S. stock market did exceptionally well, up over 28%. Average balanced portfolio, 60/40, was up just about 12.5%. Bonds were actually down due to the anticipation that the Federal Reserve is going to raise rates. Bonds went down, and in reaction to that, I've shortened maturities on most of the people's bond holdings and will continue to do so. In terms of review points for the quarter, the rebalance will look at your overall asset allocation. The bonds will continue to keep maturities shorter. And on the equities, we'll review the overall holdings in terms of growth and value and the risk reward and rebalance accordingly for expectations for this year. The other thing, given it's the beginning of the year, it'd be good to update your financial plan. A good time for for new starts and review where you're at. And then lastly, I'll be happy to provide all of your tax reporting documents directly to your CPA if you'd like me to. And for those of you who have required minimum distributions, just remember you can take it anytime during the year, and you can also use that to make your charitable contributions, which will avoid having to pay income tax on those. So I would look forward to meeting with you either in person or remotely, whatever works best for you. And I look forward to seeing you. Thank you.